All right. Unfortunately, the glory days of condo ownership are coming to an end. And this is obviously just my opinion, but I do see some structural issues with owning them, whether you're an investor or an end user. If you're owning or plan on owning a condo in the coming years, I think there's some big headwinds that you have to take into account right now, because I think resale prices are going to be greatly impacted by this, especially as it comes to condos in the downtown core. My name is Vas, and I'm a real estate broker right here in the city of Toronto, where I help investors and families navigate our dynamic real estate market. And I want to make this clear that obviously this is just a hypothetical. This is not necessarily what's going to play out in the coming years, but this is how I feel about it. I've put my money where my mouth is. I sold my last condo in May of 2023 because I believe this is kind of where things are headed. And I've had some time to reflect and think about it. So I'm going to give you my thesis in terms of why I am kind of concerned owning these assets in the future. You can make your own decisions, but I hope you find this valuable. And if you do like this type of content, please like and subscribe to the channel. First, let me just start off with why I like condos, why I've been a huge fan of condos over the last, let's say, decade. First, we've had a great run up in condo prices until kind of COVID. And then when COVID happened, that's when things kind of slowed down, and condos have been under a lot of pressure since, and they haven't really truly recovered. They've had some ups and downs, but for the most part, they're staying stagnant and flat. And in fact, I think now going into 2024, there's a lot of price pressure. So in terms of why I like condos, well, the number one reason is the absolute price point. And I think this is why most people like them. There's not much that you can get in the $500,000 to $600,000 range that provides a roof over your head and accommodations, obviously, and an entry into property ownership here in the city of Toronto, especially where it's in a really good location, most likely. As an end user, a condo can double up as an investment property down the road when you want to move up into a detached, and if you're able to keep it and buy your detached. The reason I really like condos as an investor is they're probably the most passive and hands-off landlording type of asset you can have. There's not much you don't have to do in terms of maintenance. You get amazing tenant profiles in terms of, especially if you get something downtown, Bay Street corridor, financial district, you're getting stellar AAA tenants. It cannot be beat. Condos cannot be beat from this perspective. Obviously, right now, 2023 going into 2024, the numbers really don't make any sense in terms of putting 20% down and cash flowing a condo. You really can't find it. There are some deals here and there that will pop up, especially in the studio space. But for the most part, these things do not cash flow. They weren't cash flowing for a long time, but they made sense because interest rates were so low that a lot of the principal or a lot of the mortgage was actually going to principal. So you're getting a lot of mortgage pay down that was happening, even if you were negative cash flowing. So your internal rate of return was actually good. One of my favorite sayings is strong beliefs held loosely, meaning that if better information comes along in terms of on something that you believed in strongly, you should be allowed to change your mind if it's convincing and logical and makes sense. So in this case, I used to be a strong believer in condos, but since seeing the information and the fallout of COVID, the deferred maintenance and just what I'm seeing with maintenance fees with condos across the GTA, but mostly in the downtown core, I'm starting to really change my mind about condos. And I'm going to tell you what I don't like about condos. And I'm mostly going to spend the last part talking about what I think is going to be the biggest risk. The one thing I really dislike about condos, and this has been around forever, is that it's a concentrated risk where nothing in this property is within your control. You have no control over the appeal, how it's managed, the neighbors, nothing like that, right? It's you buy the unit and you're basically subject to how good the condo board is at following through and doing what they're going to do. My biggest issue right now, especially with a lot of new condos closing, they're mostly investor owned. They're not end user owned. So when you have a lot of investors in these brand new builds, ultimately you're going to have a lot of short-term thinking on the board because people are not going to be concerned about the long-term viability of this condo. They're going to do the bare minimums, whatever the reserve studies suggest and the engineers suggest every 3 years. But beyond that, there's going to be nothing else done, even if it's counterproductive to them in the future, because most people are thinking short term. You know what, I'll be out in the next 5 years or the next 3 years. I don't care what happens in year 10. And this type of thinking is what I think is going to cause or lead us to this catastrophe that we're going to see with. My other issue is that if you own a condo that is not unique, it doesn't have any sort of unique location profile or unique in the way that it's a mid-rise boutique loft building, you're effectively getting more and more commoditized. There's more boxes come up in the sky, as we all like to call them. It ultimately devalues the remaining inventory, and the new inventory that comes up, they can't really command much of a premium because, again, it's once again just the exact same thing. They just one is newer, one is older, but ultimately all of them are aging out. and some are going to age out a lot worse than the others. And here's where the issue or the elephant in the room is. Maintenance fees are the ticking time bomb that's going to blow up in Toronto. I just don't know when. I don't know if we're talking 3 years from now, 5 years, or 10 years from now. Again, this is not to scare anybody or tell you, hey, go sell your condo, but something you really need to pay attention, because I think this is a significant. First, you can just do a very simple Google search and see what's happening in Vancouver. And it's been happening for the last, I think, almost last decade, but it's really ramped up in the last 5 years. In Vancouver, certain condo buildings can't even get insurance. And the reason for that is the insurance premiums to insure a building are extremely high. Well, why is that happening? Well, in Vancouver, certain condos were deferring a ton of maintenance. And that maintenance, some of it was preventative maintenance, some of that was just regular maintenance. But what ended up happening is when you defer maintenance, more things go wrong down the road. So that's what's happened. You have things going wrong with mechanical systems or structurally or whatever the case may be. And then you're making a lot more claims and much bigger claims to have the repairs done because the preventative maintenance wasn't kept up to date. And with that, the size of claims went up and the number of claims also went up. So now insurance companies are very wary when they're insuring these condos, especially the way they were built. Is it a concrete built? Is it a stick built? Who built it? How many floors? How many units? They will look at how many tenants there are versus end users, all that good stuff. So that is basically where Vancouver or BC is at, and that is most likely coming to us. It's just a matter of time. The BC insurance premiums, by the way, are to the tune of 40% in terms of increases that people have seen year over year, and it's not looking like they're going to slow down going into the future. Obviously, I don't know when it ends, but again, these are significant costs that go right into your maintenance fees, and they're going to be big issues when it comes to resale, trying to sell your unit down the road. If you have these ballooning maintenance fees and there's nothing you as the unit owner that can do anything about it, because it's going to be a reflection of everything that was done in the 5, 10, or 20 years prior to you owning it or while you owned it. Now, the situation in Vancouver is so bad that the government has had to get involved. And this is what I pulled from some government websites where they basically talk about the issue, effectively telling you that owners from these old buildings, they have been reluctant to maybe undertake major system upgrades until problems occur. And basically what I was saying, when problems occur because you didn't do your maintenance, kind of like a car, it will be more catastrophic. It's going to be more expensive. But unlike a car, you can't just scrap it and go buy a new one. You have to deal with what you have. And this is why these condos are experiencing these huge premium hikes in their insurance premiums, which are reflected immediately into your maintenance fees. And guess what? When your maintenance fees go up, especially by amounts like this, then you're going to have a lower resale value relative to other real estate in the same market. Not only that, but I know in Toronto here, talking to friends of mine who work for builders, that are in property management, a lot of condos in the last 5 to 10 years have been built with a lot of what they refer to as new technology. But new technology does not necessarily mean reliable technology or technology you want in your condo. And guess what? The last thing I want to do is I want to find out whether or not the technology works. Once something fails and we get the repair bill on it, I want to have nothing to do with it. And there are a few condos right now in the city of Toronto that are experiencing this. And guess what? They're all going to have special assessment where everybody's going to not only face a much higher maintenance fees, but you're going to have a special assessment over the next couple of years to pay above and beyond for all the repairs that have to happen to get this building back in line. This is something you can't shake, and it's going to have an immediate impact to the value of the building, especially while that special assessment is on the status certificate. For those of you unaware, this is how maintenance fees are allocated in your typical condo corporation, just to give you an idea. So you have your reserve fund, administration, utilities, contract services, repairs, and maintenance. So effectively what ends up happening is these two buckets are going to grow significantly. Admin is probably the one that maybe you can peg to inflation, but everything else, you're looking at much bigger increases. Now, some people argue, well, you don't have to put away as much into the reserve fund, but guess what happens? The second you have a catastrophic repair and you don't have this reserve fund, you're going to have something much worse. And that is back to what I was saying before. You're going to get hit with a special assessment. And the last thing, when you're paying your $800 monthly maintenance fee, the last thing you want is another $8,000 fee for the next 3 years for a special assessment to hit or fix some big item that failed. For example, I recently looked at an old Tridel building, and they were 35 years in where they had to do their first balcony, call it improvement refurbishment, which cost $1 million. Fairly big building, but $1 million for balconies, obviously this is a big hit, but they had budgeted for it. They had the reserves. Everything was fine. Similar thing with windows, similar thing with boiler systems, all these things. These are all deep into the 6 figures. These are not items that you can just, do a couple of repairs here and there. These are massive improvements and upgrades because they're the tail end of their lifespan. The reason that's important is I'll show you an example here of a couple of buildings that you will see the recommended annual contribution, which is 11%. Now, the annual recommended contribution doesn't necessarily mean that is what's going to be the increase to your maintenance fees, because there's obviously going to be a negotiation or a debate within the board members in terms of if they're going to pull some from the reserve or if they're going to try to cut costs somewhere else, or how they're going to manage this so that they don't get hit with this big thing. So I owned a condo where the recommended bump was, I believe, 12%, but because they had a surplus from prior years where they beat budget, they pulled some money out of the reserve. So effectively the maintenance fee increase would have been about 8%, but the real maintenance fee increase would have been 12 had they not done well in the years prior. So these are the games I just don't like it, because none of this stuff is within your control. But again, these are the numbers going into the future that a lot of condos are looking at. And I think the battle is going to be even bigger for newer condos that have no reserve funds, because between inflation, between services going up, between experimental technology, they actually have to beef up their reserve funds by a lot more. And if there's going to be something that fails early on prematurely, you're talking immediately a special assessment. You're talking immediately a hit to the resale value of the entire building. Again, not something I want to partake in. And this is basically why I have really changed my mind on condos. Obviously, this does not apply to every single condo, but if you're a condo owner as an investor or somebody that lives in one, this is something you should inquire in. You should be more involved in your board. Talk to real estate agents that trade a lot of condos. I've done a lot of condos. I know these things. I have so many status certificates that I have saved over the years, or I kind of have a very good idea in terms of which condos perform well, which ones don't. But even in the condos that I've owned, which were well managed, again, you're still dealing with the fact that there's a lot of price pressure with contracts, with trades, with everything else, where even if it's well managed, you're still kind of at the risk of inflation and just the fact that we don't have as many trades to service these things. And this is how prices go up above and beyond inflation. If you have specific questions about buildings, you can text or email me. I might have an old status certificate. I might have been through the building, so I might be able to at least give you some input, but something for you to consider and get more involved. And if you like this video, please like it, subscribe to the channel, and I'll see you in the next one.